Each morning is a blank canvas. It's up to you to paint the day's masterpiece. Good morning, everyone gathered here. I welcome you all to this session of Young Investors Awareness Program organized by the Department of Business Administration. Now, I request the Dean of BBA Department, Ms. Claret Pereira, to escort the guests to the dais. It is our distinct honor and privilege to extend a heartfelt welcome to Mr. Salman Qureshi, the business head of Zerodha. I request Ms. Claret Pereira, the Dean of Business Administration, to extend a green welcome to our guest. I also extend my hearty welcome to Ms. Claret Pereira, the Dean and the convener of the session, Ms. Binny Chan, and the faculty members of BBA department to this session. We are truly delighted to have the students of business administration with us today. Now, I request Ms. Bhakti from 2nd BBA A batch to introduce us to our guest, Mr. Salman.
Salman Qureshi is a business head and part of the core team in Zerodha. He is also part of Zerodha's education initiative. Sir is extremely passionate about helping people do better with their money, particularly those who are just starting their financial journey. He is eager to provide them tools and techniques that will allow them to make better financial decisions. Sir, we welcome you for today's session.
Thank you, everyone. Thank you for this warm welcome. And thank you, ma'am. I work with Zerodha. I've been part of Zerodha's team when we are just about like 7-8 member team, and we've grown to be over 1,200 employees and worth over $3-4 billion at the moment. For those of you who are not aware what Zerodha does, we are one of India's largest stockbrokers. Before Zerodha, brokers normally used to charge a percentage-based fees. Whenever you are buying and selling in the stock market, whenever you buy and sell stocks, there's a brokerage cost that is associated with that. So we are the first brokers to create a flat fee model, which initially helped us get some traction. And then we leveraged technology and created tools that was more suited for Gen Z and young India. So not taking too much of your time, if we could start with the presentation. Yeah, so the topic for today is personal finance. So this is a trend that we have seen recently. It took us 9 years to reach 1 million clients. But then COVID happened, and we really thought that's like a doomsday scenario because the stock market was plummeting, right? And our CEO at that moment, he told us, don't spend much money, live like monks, because there was a lot of uncertainty in the market. But the opposite happened. The market bounced back very ferociously. As I said, we made 1 million clients in 9 years. We made 9 million clients in the next 2-3 years. So that was the kind of influx we had of young people who had time to think about, what they're going to do with their money, how they're going to save, how they're going to invest. So we had a lot of Gen Z millennials coming into the market. And there was also another trend we observed is that they were coming into the market with minimal knowledge, right? They were not sure what they were doing. Most of them, I would suppose, are buying and selling on gut decisions or from tips they would have heard. We at Zerodha, we have been working also on educating our clients. We have a free education portal called Varsity, which is among the leading free education platforms in the world with everything to do with the stock market. So as an extension to Varsity, we decided that we'll be more active in talking to younger people and educating them a bit about how things work in the market so that you do not have a steep learning curve ahead, and you have some tools that help you navigate the markets better. All right, so I need to, yeah, there we are. All right. So why learn about personal finance? Uh, that learning personal finance is crucial in your journey to financial security and independence. I guess that's also why you're here, is to get educated, learn skills, and then later apply your skills, and also make some kind of an income to sustain yourself for your future, right? So it's extremely important to know about personal finance, because whether you like it or not, you will be a money manager in the future, managing your own money or your family's money, right? Also, personal finance will help you make better informed decisions. There are a lot of fads which periodically come up in the markets, whether it is, any NFTs, or, some kind of new crypto coins, etc. There are a lot of new fads that come up. So having a good understanding of finance will help you bypass a lot of things that could potentially cause harm to you financially. The third advantage knowing about personal finance would help you is by avoiding debt and financial pitfalls, right? I think it's pretty obvious what that means. Um, the next point would be preparation for life's uncertainties. If you seriously have a plan for managing your finance, and you're able to create cushions for yourself for uncertainties, and we all have events in our lives that can really disrupt our finances. So a good understanding of personal finance will help you with that regard. And lastly, it'll help you, it'll empower and give you more control. So if you have a nice, well thought out plan, you'll not need to stress yourself too much, and you'll be in control of your financial future. Right, I'm going back. All right, so I'll be discussing a few building blocks today of personal finance. The first one, the first foundation would be to have an emergency corpus. Of course, you all are students, so I don't think you all would be, too tuned to this at the moment. But once, when you start working, I'm sure all these points are going to come in your, come on, will be a priority for you. So emergency corpus is one. Secondly, you'll need to get a life and health insurance. Thirdly, you'll need to invest in equity, which is by far the best performing asset class, and ensure you regularly invest in some decent fund. Also, you'll need to diversify and ensure that you have done some kind of a basic asset allocation. And fifth point, don't forget to live, meaning spend money and make good memories, enjoy yourself. Yeah? All right, so before we head into that, why save, right? And why do you need to invest in any asset, right? One of the major reasons to do so is because of something called as inflation. Milton Friedman has defined inflation as inflation is caused by too much money chasing after too few goods, right? So what happens is money which is not growing its value tends to erode over time. You might have seen it yourself, like the value of what 100 rupees could get you 5 years ago is not the same value it has today, right? That's because every year you have inflation that keeps decreasing the value of the money you have. So if you have money that is just idle and not growing and in your saving account, over a period of time, that the value of that money, the purchasing power would depreciate quite significantly, right? So if you actually look at the graph there, monthly you have monthly inflation rates, And if you actually see what's the average inflation the past decade, it's been about 6%. So if you want your, to whatever you save in the future to be uh, worth equivalent or more in the future, then you have to ensure that it's growing at a rate of 6% on the minimum side, right? So inflation is on one side that we have to ensure that we beat. Whenever we save, whatever is our portfolio, we have to make sure that it rides above 6%. So this concept of finance called compounding is something that is on your side. Rather than how inflation works against you, compounding actually works in your favor, right? So compounding basically means when you invest small amount of funds regularly over a long period of time, the amount tends to compound, right? Because you say you invest 5,000 rupees on a monthly basis, and you get some kind of a profit or interest on that, and that keeps adding to your principal amount, and you keep uh, deploying additional funds to it. So that creates a kind of has a snowball effect, right? We would have heard stories, or maybe some postman who has saved for many years, and at time of his retirement, his funds is worth a few crore rupees, So that happens because of compounding. Compounding, as Albert Einstein put it, is considered as a wonder of the world, eighth wonder or ninth wonder, I'm not sure. But it definitely has that power where it can take small amounts of money, invested over a long period of time, and turn it into something that is something you couldn't have thought of at this stage. So since you guys are all starting early, this is something that I hope you, if for nothing else, you need to be aware of the principles of compounding, and make sure the early you start, the better it is, even if it's with a humble amount. Just the practice, just the habit of adding small amount, 500 rupees or 1,000 rupees, or whatever you think is affordable, and just keep that habit over a long period of time, your future self will thank you for it, right? So ensure that you build up that habit, especially once you start becoming independent and you're in the workforce. All right, so getting back to the main building blocks, uh, as I said, the first important aspect is we all need to ensure we have like a rainy day fund. And this is, extremely critical, and probably the first thing you do once you start working and once you start making some money, right? Always ensure that you have like a 3 to 6 months runway, whatever is your expenses for 3 to 6 months, you should make sure you have that tucked away. And especially with the conditions that are ongoing in the market today, right? With AI, a lot of service jobs will probably not be here, in the next five years or so. And there's always uncertainty. So you'll need to have some kind of a fund to, that will give you a cushion, and they'll give you a runway while you, sort of pivot towards something else in your career, right? So make sure you have a rainy day fund, typically 3 to 6 months. Again, it's up to different people and what they can manage. But that is definitely the first thing to do. And you can keep it in a fixed deposit, or you can keep it something known as liquid funds, which would be a bit more advanced. So those are the options. The next thing is insurance. Especially being young, we don't really think about insurance and things like that. It always has a negative connotation. But, these are also eventualities that will happen, right? So make sure that you have good medical insurance cover that covers your entire family. And of course, you can take life insurance as well. Medical insurance is absolute must, as soon as you start working, because this is the number one middle class killer, right? Because usually, someone from the family falls sick, etc. And without having insurance, it usually runs into many lakhs and can really be a big setback for everyone, right? So have a rainy day fund, make sure you have medical life insurance. These are the absolute basics before you even think about investing. All right. Thirdly, how to help your money grow more than 6%. So the asset class, which has over the past hundreds of years have proven to, have outsized returns, would be equity. When I say equity, I mean stocks, right? Stocks and derivatives of stocks. Uh, are you guys aware what IPOs are, right? Yeah, so IPOs are initial public offering. Companies which, they require public funding. They usually collect funding from the market and they list on the stock exchange. So IPOs in the past have been like a gold ticket, and people would usually participate blindly in IPOs. But that has kind of changed a bit in modern times, because the nature of the businesses has changed in modern times. A lot of businesses list on the exchange with a lot of debt on them, where they get funding from VCs and other venture capitalists worth over thousands of crores. So they'll be profitable in the long run, but it's very important that when you're investing in IPOs, that you're aware of this and aware of what is the profitability of the company, and not just go for names, right? Like what recently happened with like a Paytm or Zomato, etc., right? So it's very easy for us to relate to those products. So, but it's important to know, the background of how much debt they're in and what it will take for them to be profitable, right? And of course, you can buy stocks yourself. Buying stocks, most of the stockbrokers these days have their own online platform where you can easily buy and sell stock, just like how you shop on Amazon, etc. Right? So, buying stocks, and also if you do not have the personal bandwidth to try and figure out what stocks to buy, what not to buy, you could always invest in mutual funds. Mutual funds are basically professionally managed funds, where a fund manager will pool in funds from lakhs of people and use that amount and manage that amount and invest it on your behalf, right? So that is, in a nutshell, what mutual fund is. I have a quote here, which is my favorite quote, which it's a saying of Warren Buffett, where he says, "Our favorite holding period is forever." Right? So this is something else that I wanted to talk to you all about. Is there's no easy way to make money. Especially looking at myself when I was younger, is I was extremely naive, and I thought, you can just like double your money quickly, or you can make an outsized return very quickly. But usually wealth is built over a long period of time. So, even Warren Buffett, for example, uh, 20 years ago, he was not the most highest performing investor. There was someone else, right? I forget his name, but that person, portfolio return was 300% more than Warren Buffett's. But Warren Buffett, in the next 20 years, because he was invested for so long, he's worth over 49 billion today. So it's extremely important whenever you buy an asset, to keep invested in that asset for as long as you can. That is when you will see outsized returns. Right? So the next main building block is asset allocation. I spoke about equity, But whenever you are looking to build your own portfolio, um, you cannot put all your eggs in one basket, right? So you have to make sure that you have a good mix, whether if it's equity, mutual funds. In mutual funds, you could look at debt funds, which are, which will give you like a fixed rate of interest, but they are also low risk, right? So you could look at debt funds, you could look at having some gold, fixed deposits, and of course real estate. But real estate usually is illiquid, like it's not very easy to buy. Buying involves a lot of research and activity, and selling also requires, for you to wait for the right deal and the right, right customer to buy it from you. So real estate is usually very illiquid, whereas something like equity, mutual funds, and when I say gold, I'm not talking about physical gold, though I'm sure all the ladies here, when they think of gold, they're thinking of physical gold. But you do have, gold assets called digital gold, like gold sovereign bonds, which give you a 2.5% interest, and they all also give you the appreciation in gold over the long term. So sovereign gold bonds are very popular among investors to have gold exposure, um, without the handling fees, etc., but also ensure they get an interest out of it along with the appreciation. And you know, we have gone through real estate, fixed deposits as well. Fixed deposit, I think, is, and everybody's parents here, everyone, they probably, that is their favorite investment strategy. So yeah, I mean, this is just a table that shows you in the last decade what asset classes have done well. So as you can see, 2013 you had, international bonds doing well. Uh, 2014 was the year for small cap. Small cap is stocks which have a capitalization of, I think, less than 5,000 crores. So this is the reason why you need to have a mix in your portfolio and not put all your, eggs in one basket, right? So, and how you do that is up to you. Usually people, the thumb rule would be like do 60% of equity and 40% you divide it among gold and debt bonds, etc. And as you get older and you become more conservative, maybe you could switch that to 30, 40% equity exposure and 60% into, fixed interest instruments and gold. Yeah, so, uh, after going through this, you know, I'm sure what you all will be wondering is, what is the best asset to invest in, right? Is it gold? Is it just, what do you say, fixed deposits? Is it equity, alternative investment funds? The most important asset is yourself, because your capacity to earn directly decides how much funds you're able to put in your portfolio, right? So it's very important for you all to invest in yourself first. Make sure that, especially in this day and age where things are moving very quickly, it's important for you guys to pick up new skills. Range is extremely important in life, right? Because I was in IT and I managed to get into finance, right? So in life, it's not linear. You will always end up doing what you're studying now will probably not be something that you may utilize later on. Though knowledge will help you, but as I said, you'll need a broader skill set, and that will also allow you to be more aware of the opportunities there are and what you can do, right? So experiment, learn a lot of different things, and usually people who have a broader range, they tend to stand out, right? They tend to stand out. I remember when, I was like just a sales guy and selling account, and, one of my senior wanted a presentation. So I made the presentation for him in a PPT. As simple as that. All these small skills that you gain will help you in the long run, right? Also, talking about equity, because I don't really have my laptop here, but I wanted to run you through our trading platform, which is Kite, where you can buy and sell stocks, where you can see all charts of different companies, and just to give you like a purview into how that looks like, right? And also, while talking about stocks, it can be quite intimidating. And as I said, we have seen a lot of newcomers make lots of mistakes by just buying stocks on hearsay or because of, just gut instinct. So it's very important, to have a strategy about how you're going to buy, what stocks you're going to buy, etc. So I wanted to show you a tool called Small Case. It's basically a thematic investment platform where instead of thinking about buying specific stocks, you just pick an idea that you like, that you think will do well in the future, and based on that idea, there'll be some stocks, that will be related to that idea that you can invest in, right? For example, if Narendra Modi has announced like a smart city project, right? You will not know which companies is going to benefit from that project. So Small Case would have a theme called Smart City Project, which in one click you could buy all the companies that are associated with that project, right? So it gets a bit complicated trying to tell you without actually showing it. But yeah, just wanted to let you know there are tools like that which will help make things like this easy for you. All right, so there's a slide actually for my younger self. We all do stupid things, but learn to identify risk, right? The thing about us humans is, especially when it comes to behavior in the stock market, is we are very risk averse, right? If we look at all the data we have about people who are trading and investing in the markets, people are generally right 60 to 70% of the time. But yet, most of them lose money, right? This I'm talking about trading, not investing. Investing over a long period of time, you will make money. But people who trade, like day trade or what we call swing trading, where you trade in a short frame of time, they tend to lose money. And that is because of not identifying their risks properly, right? And this happens because once you are profitable, you tend to cut your profit short, right? You see, say you're in a profit of 10,000, right? You're very euphoric about it. You're very happy about it. And then when you see it fall to like 8,000, you immediately get a sense of a mistake you have made by not getting out at 10,000. Right? And then you wait again, and as soon as it comes to 10,000, the behavior is to just sell it and book that 10,000 profit and say, be happy, okay, I got my profit, right? But with loss, we opposite behavior. If you are in 10,000 rupees loss, you would say, let me wait to see what happens. Hopefully it will recover. You become hopeful and you wait. You give yourself some more buffer. You say, we'll see maximum 15,000. If it goes to 15,000, minus 15,000, I'll square it off. Right? And then if it goes minus, so this is a very common behavior that we see where people they do the opposite. They book their profits short and they let their losses run. So, and it's very hard to go against human behavior, but the idea is to always ensure that let your profits run over the longest period of time you can and cut your losses short, right? So it's important to have a stop loss. with respect to market, you have money stop loss. And for everything in life, you need to make sure you have a time limit for yourself as well, right? All right, so just going to get a little bit into things to avoid financially. Number one on the list is the day you get a nice shiny credit card. That is the day you guys should be really afraid. Because credit card, it doesn't even feel like money when you're spending it, right? And it has a sneaky way of gaining up on you to a point where you cannot pay it off, right? And the problem with credit cards is that the interest is charged annually to about 30%, which is ridiculously high. But normally people don't realize that. So as I've mentioned here, the current consumer-driven world is designed to make you spend, right? All those nice sleek ads on Insta or whatever it is, there's always a shiny product to buy, right? So, but make sure, you don't spend using your credit card to buy that, right? And that's one of the principles of personal finances. You can have the best of something, but you can't have the best of everything, right? So even those kind of purchases that is expensive, make sure that, you choose very diligently what a purchase, especially when it's very costly. And of course, this is for more senior people, where they see like ads of, someone telling them you'll double your money, etc. There's a saying in the stock market that stock market is the toughest place to make easy money, right? There's nothing called as easy money. In fact, if there's a portfolio manager who beats the fixed interest rate, which is 6-7%, we consider that good, right? If you're able to beat fixed deposit rates, right? And 10 to 15% is ideal. So over the long run, there's nothing called as paisa double, right? And avoid investing in unregulated funds, your chit funds, etc., right? And also, as I was telling you guys, the past 2-3 years, we had an unprecedented client-based growth. Mainly, where would these clients learn about markets? From finfluencers, right? Nowadays, anything you want to learn, you just open YouTube and you'll find some influencer who's trying to sell you some idea of how simple it is or easy it is without actually having any kind of a professional insight themselves, right? So, SEBI is also coming down heavily on finfluencers. So I think in the future, they won't be able to publish any videos without having an investment license. But the idea is that, be wary when someone tells you there's easy money to be had. Even when I was a salesperson, because I'm associated with the stock markets, people would always ask me, where do I buy? What do I buy? And I would always tell them, dude, if I had a money-making machine, I would make it myself, right? So no one really knows what's going to happen tomorrow, right? So especially when it comes to the world of investing. And that's also the reason why you need a strategy where you're diversifying your portfolio with stocks as well as, other asset classes like gold and debt funds, etc. Right? Yeah, so this is all for, more younger people. Is pick habits from people you spend most time with, right? So pick your friends carefully. There's a saying, chasing the Jones, that's an American slang, which means like people usually look at someone else and, they see their neighbor, what car their neighbor has, and they want to aspire to buy the same things, etc. So it's very important what kind of a crowd you're in. That will also, your spending habits will depend depend on that, right? Habits you pick up early in life tend to stick with you. So if there's anything else, one thing you can take away from this talk is make sure that once when you all get your first paycheck, make it a habit to start investing small amounts of money in whatever asset class that you like, because more than anything, that has the potential to make you into a crorepati or whatever it is over a long period of time, right? So make sure you always keep that up. So 3 habits that have paid dividend to me is prioritizing saving over everything else. So there's a philosophy of pay yourself first. Normally what we do is if we get a paycheck, first we'll list out all our expenses we have, and then finally whatever is left over, we'll think what to do with it, right? So have a fixed principle where you pay yourself first, where your investment account gets some money in the beginning, and then you work the other way around, right? And lastly, ensure you all avoid debt, because debt is, the debt trap is something that is, once you get into it, it only becomes, a bigger problem. So yeah, for your further reading, if you're interested, I would definitely recommend you all to check out Zerodha Varsity. This is the free education platform that I was telling you all about. Here we have, oh, okay, I didn't even know I was just going on and on. So yeah, for further reading, you can look at Zerodha Varsity. Everything to do with the world of investing and where you can learn right from basics to, fundamental concepts and technical concepts, and so yeah, if you are interested in this world, definitely I would encourage you all to give it a read. All right, so I know you guys are probably also hungry and you've had enough of me just going on and on, right? So we'll conclude the presentation, and if you guys have any FAQs, if you have any questions to ask, I'll be happy to answer them. You have a couple of mics?
Good afternoon, sir. You had
Yeah, good afternoon. Is this working also? Hello, hello. Yeah, cool.
So, sir, I want to start my journey in trading, and there's a lot of confusion. Should you start trading or should you start investing? Because when you go to the world of YouTube, there are a lot of fin influencers who actually through your platform are trading consistently and making profits. Right. So, and you tell trading is risky. So what is your opinion on trading and how, because there's information everywhere, but there's no authentic information. Like there's no proven strategy. So where do you think we can get our authentic strategy for ourselves and we can trade and become a profitable trader? So one more question is, which I had is, the big money which investors already made through identifying a company and they're very bullish on it and it's become very big. Especially you have seen Adani's, whose stock price was a couple of hundreds, today went to a couple of thousands. Right. Not any particular stock recommendation as such, but do you have any ways to identify those kind of small or mid-cap companies which has potential to become a large-cap company? So yes, thank you.
Let me see if this still works. Can I use that? Because I think... Sorry to make you run around. So yeah, firstly, regarding how to begin trading, one thing let me tell you, I know when someone makes money, they start influencing their friends and they say, I'm starting to make so much money trading, etc. One thing you have to realize is in a bull market, everybody is an expert. Because you buy anything, usually it will go up in a bull market. Right? So it's only when you have experience like a sideways market or a bear market, which gives you mixed signals, right? That is when you actually get tested as a trader, right? Regarding if you're looking to start off trading, firstly, what methodology aside, the first thing is protecting your capital, right? This trading is not an attacking game, it is a defensive game. It is about protecting your capital, right? So whenever you do trade, make sure on any particular trade you do not spend more than 10% of it, right? Or if you have a bigger corpus, make sure you don't spend more than 1% of your portfolio money, right? Regarding strategies, there's no, as we say, there's no holy grail, right? What worked for me may not work for you. But general things that you can look at is charting patterns. If you study patterns, that will give you an idea of where the stock is right now in its cycle, right? And there's a golden rule, which is never go against the trend. The trend is your friend. So if the trend is up, you're investing. You're going long on the stock, as we say, right? So always go with the trend. Never overspend on any particular trade. Don't be over leveraged. That's extremely important. And stick to the basics. Use charting patterns. You can use there are all kind of technical indicators that you can look at. As I said, since you're new, you could look at Varsity just to give you unbiased information. It's more, it's built with a mindset of being, a long-term finance. It's not a fad. It's not going to teach you something that is good for right now, but it is something that will be applicable for anyone studying finance at any point of time, right? So you can definitely look at charting patterns because charts tell a story of a stock. You could look at combining that with technical indicators as well. Regarding investing over long term, there are a lot of platforms which help you filter stocks, depending on various different conditions, like ticker tape, right? So you can use these tools to kind of shortlist what you want to buy.
Thank you, sir, for being here with us today. Now, I would like to call upon Ms. Nimra from 2nd BBA batch to propose the vote of thanks.
Expressing gratitude is not merely a formality, it is a powerful knowledge of the goodwill and support we have received. Today, as we come to the end of this remarkable event, I stand before you with a heart full of gratitude and appreciation. First and foremost, on behalf of college management and Department of Business Administration, I extend heartfelt gratitude to our esteemed resource person, Mr. Salman Qureshi. We are deeply appreciative of your generosity in sparing your valuable time from your busy schedule to share your valuable insights on subject of investment with us. Thank you so much, sir. I also would like to extend our sincere appreciation to Mr. Manuel Tauro in his absence, who graciously stepped in acting as a director of Arupe Block. His presence has always been an inspiration to us, and we are truly thankful for his support. I also express my gratitude to Ms. Claret Pereira, our esteemed Dean and Head of Department of Business Administration. Your presence, ma'am, serves as a constant inspiration to us. I would also want to extend my gratitude to convener of this session, Ms. Binni Chan, for organizing this awareness program. This truly empowered young minds present here with valuable knowledge about investment. I cannot forget to also thank maintenance officer, maintenance staff, faculty members of Department of BBA, MC, the prayer team, and you, my dear friends, for being a wonderful audience. Thank you all.